All right, welcome everyone to another deep dive here on Stock Explorers.
Glad to be here.
Today we're diving into Ouster, ticker symbol OUST.
Yeah.
They're a company in the sensor technology world, more specifically LiDAR, which has been pretty buzzy lately. A lot of players, a lot of big
hmm
promises. We've got a ton of info on Ouster, and we're going to try to sift through it, figure out what matters, and ultimately, help our listeners understand whether or not this is a company that should be on their radar as a potential investment. We'll be looking at their recent performance, kind of their strategic positioning,
Hmm.
and just generally the outlook for Ouster. What do you think? Sound good?
Sounds great. Should be interesting to see how all the pieces fit together.
Yeah, absolutely. So I guess kind of jumping right into it, one of the things that stood out to me right away was their recent revenue growth. They hit a record $30 million in Q4 2024.
That's right. And importantly, that number exceeded analyst expectations. Plus, it marks their eighth consecutive quarter of revenue growth. So it's not just a one-time thing. There's a clear pattern of increasing demand for their LiDAR technology.
8 straight quarters, that's pretty impressive.
Definitely encouraging.
And then zooming out a little bit, their full year revenue for 2024 was even more impressive, reaching a record $111 million.
Yeah, that's a big jump. A 33% increase year over year really shows the market's appetite for these types of sensing solutions. You mentioned a few of the industries where they're seeing success: automotive, industrial automation, and robotics as well.
Right. And, revenue growth is great, but at the end of the day, it's all about profitability, right? So that brings us to their gross margins, which also saw some really impressive movement.
Couldn't agree more. The improvement in Ouster's gross margin is definitely something investors should be paying close attention to.
Yeah, absolutely. So in Q4 2024, their GAAP gross margin, so that's generally accepted accounting principles, surged to 44%. That's more than double where it was in Q4 2023 when it was only 22%.
That's right. Even compared to Q3 2024 when it was 38%, that's a pretty significant acceleration.
Yeah. So what's driving that kind of increase? Is it just one thing, or are there a few factors at play here?
It's likely a combination of things. It could be improved manufacturing efficiency. Maybe they're selling a higher proportion of those higher margin products. Or maybe they've simply got stronger pricing power in the market now that their technology is more widely accepted. But no matter the reason, it's a strong positive signal.
Absolutely. And if you look at the full year, their GAAP gross margin was 36%, which compared to only 10% in 2023, it really shows how far they've come.
For sure. That kind of progress on the margin front really suggests they're on the right track towards consistent profitability.
Now, it's one thing to talk about margins and revenue, but how about the actual product? How many sensors are they shipping?
Well, that's another area where they're seeing really positive results. In Q4 2024, they shipped over 4,800 sensors. And for the full year, that number was over 17,000.
Okay, so they're clearly getting their sensors out there.
Yeah, and even more encouraging is the breakdown of those shipments. Specifically, the volume of their OS series sensors, which are a core part of their product lineup, increased by over 50% in 2024.
That's a pretty big jump.
It is, and it really speaks to their ability to scale up production and meet that growing customer demand.
So we've got strong revenue growth, expanding margins, and increasing shipments. It sounds like things are moving in the right direction, but I guess the question on a lot of investors' minds is, what about the path to profitability? When will they actually start turning a consistent profit?
It's a valid question. While they haven't given a specific timeline, their strategies definitely provide some insight into how they plan to get there.
Okay, so what's the game plan?
Well, one key focus is on scaling their software-attached business. The idea is that offering software solutions alongside their hardware can create higher margin recurring revenue streams. Investors generally love that.
Right, it's kind of the classic razor and blades model.
Exactly. And they're also being very disciplined with their operating expenses. Their goal is to keep them at or below the levels we saw in Q3 2023.
So controlling costs while also driving revenue growth.
Exactly. And they've also set a long-term gross margin target of 35% to 40%. Now, they actually exceeded that in the most recent quarter.
Oh, wow, so they're already ahead of schedule.
It seems so, although it's worth noting that some of that outperformance was due to benefits from older inventory.
Right, so it might not be entirely sustainable at that level just yet.
Exactly. But overall, their strategy is clearly focused on growing those higher margin aspects of their business while keeping costs under control.
Makes sense. Now, let's shift gears a bit and talk about their financial health overall. How strong is their balance sheet?
Well, they're in a very strong position. At the end of 2024, they had $175 million in cash, cash equivalents, restricted cash, and short-term investments.
That's a pretty hefty war chest.
Yeah. And what's even better is that they have zero debt. They fully repaid the revolving credit line.
So they've got a lot of flexibility.
Tons of flexibility, no burden of interest payments. They can invest in R&D, pursue new growth opportunities, all without having to worry about debt hanging over their heads.
Yeah, that's a really strong foundation.
Plus, they've managed to significantly reduce their annual cash burn rate. They achieved a 60% reduction over the 12 months preceding September 2024, so they're getting much more efficient with their capital.
All right, so we've talked about the past and the present. What about the future? What kind of guidance have they given for Q1 2025?
Well, they're expecting revenue to be between $30 million and $32 million.
Okay, so continued growth.
Yeah, and what's interesting is that the analyst consensus is right in line with that guidance at around $30.7 million.
So it seems like everyone is generally on the same page.
Yeah, which suggests a certain level of confidence in their near-term performance.
Okay, so looking beyond just the next quarter, what are some of the things that could really drive their growth in the future? What should investors be keeping an eye on?
There are a lot of potential catalysts. First, just maintaining that strong financial performance, exceeding revenue expectations, and continuing to improve those gross margins.
So staying the course.
Exactly. But beyond that, the success of their software-attached business is going to be key. That's what will really drive profitability and attract those investors.
Right, the higher margin recurring revenue.
Exactly. And then, of course, there's the new product announcements and market adoption of those offerings. You know, things like the 3D zone monitoring for the RV7 sensors, the Ouster Gemini perception platform, and solutions for smart cities like Blue City.
Okay, so innovation and market traction.
Exactly. New contract wins are always good news, too. Things like that $2 million smart traffic project in Chattanooga.
Yeah, those are definitely real-world examples of their technology in action.
Exactly. And then there's the potential for expansion into new markets and applications for their LiDAR technology. You know, they're already in automotive, industrial, and smart infrastructure. There are always new areas to explore.
Right, new frontiers.
Exactly. And any advancements in their core technology, particularly those next-generation custom silicon chips they're working on, those could be huge.
Yeah, those could really give them a competitive edge.
Absolutely. And then, you know, things like positive analyst ratings, price target increases, a favorable overall market for LiDAR and autonomous technologies, those can all play a role too.
So a lot of potential tailwinds.
Exactly. And of course, there's the potential for them to secure those big OEM production program awards in the automotive sector.
Yeah.
That's the kind of thing that could really move the needle.
Yeah, if they could land a few of those, that would be a game changer. Now, we've talked a lot about the positives, but what about the competitive landscape? How does Ouster stack up against the other players in this space?
That's a key question for sure. When you compare them to the competition, a few things stand out. First, their gross margin profile is really strong.
Yeah, we talked about that 34% number. That's impressive.
It is, especially when you consider that some competitors, like Luminar, were still reporting negative gross margins as recently as May 2024.
Oh, wow. So they're really ahead of the curve there.
It seems so. And their revenue for FY 2024, that $111 million, puts them right in the mix with their peer group. They're competitive.
Okay, so they're not just a small player trying to catch up.
Not at all. And then there's that balance sheet strength. You know, all that cash and zero debt. Some competitors, like Luminar again, are carrying debt, which can be a drag on their performance.
Right, that debt can be a real burden.
Absolutely. And then finally, I think their diversified market approach is a real advantage.
Yeah, not putting all their eggs in one basket.
Exactly. A lot of LiDAR companies are really focused on automotive, but Ouster is generating revenue from industrial and smart infrastructure as well.
So a bit more balanced and potentially less vulnerable to downturns in any one sector.
Right. Now, speaking of smart infrastructure, you mentioned that Chattanooga project earlier. Can you tell us a little bit more about that?
Yeah, so that's a $2 million contract with the city of Chattanooga for a LiDAR-enabled smart traffic management solution.
It's a great example of how their technology is being used to solve real-world problems.
Exactly. And it's not just a pilot project. This is a full-scale deployment at over 120 intersections.
Making it the largest of its kind in the U.S.
Yeah, that's pretty significant.
It really shows the potential of their technology to make roads safer and improve traffic flow. And it demonstrates their ability to win deals in a market beyond just automotive.
So it's not just about self-driving cars.
Not at all. Smart infrastructure is a huge growth opportunity.
All right, so beyond smart cities, where else are they seeing growth? What are some of their key target markets?
Well, they're seeing increasing adoption of LiDAR in all those key areas we've mentioned: automotive, industrial automation, robotics, and smart infrastructure. And their strategy is to grow their software solutions, which are higher margin, and increase their installed base of sensors.
So it's about both hardware and software.
Exactly. They see particularly big opportunities in things like warehouse automation, where robots need accurate 3D sensing to operate efficiently. And of course, there's the continued development and deployment of autonomous vehicles, which is a major driver for the whole LiDAR industry.
Right, that's kind of the holy grail for a lot of these companies.
It is, and their customer base is already quite diverse. They're working with automotive OEMs and tier one suppliers, robotics companies like Serve Robotics and Vecna Robotics,
Yeah.
industrial automation companies, and of course, those smart infrastructure providers like the city of Chattanooga.
So they're not just relying on one or two big customers.
Exactly. They've got a broad base, which is a good sign.
Now, we mentioned Serve Robotics and Vecna Robotics earlier. Can you tell us a bit more about those partnerships?
Sure. So the Serve Robotics partnership is a multi-year agreement for Ouster to supply thousands of their OS digital LiDAR sensors for Serve's autonomous sidewalk delivery robots.
Okay, so this is for those little robots that deliver food in packages.
Exactly. And it's a big deal because that market is growing rapidly.
Yeah, last mile delivery is a hot space.
It is. And then there's the Vecna Robotics partnership. They're developing autonomous vehicles for warehouses, and they're expected to use around 3,000 of Ouster's LiDAR sensors through 2025.
Okay, so another significant partnership.
Yeah, and it shows that other companies are really confident in Ouster's technology.
Right, they're not just selling sensors, they're forming real partnerships.
Exactly. They also have an agreement with Outrider, which focuses on autonomous yard trucks. So that's another interesting application.
So a lot of irons in the fire.
They're definitely busy.
What about the technology itself? Any recent advancements worth noting?
Yeah, actually, they've been quite active on the innovation front. They recently introduced a feature called 3D zone monitoring for their REV7 digital LiDAR sensors. Basically, it adds onboard perception capabilities so the sensor can understand its surroundings better.
Okay, so it's not just raw data anymore.
Exactly. It's about making the sensors smarter. And they're also developing a new platform called Ouster Gemini. It's a digital LiDAR perception platform that uses AI-powered software for more advanced object detection, tracking, and classification.
So they're leveraging AI to enhance their capabilities.
Exactly. And they've even launched a cloud portal for Ouster Gemini, which allows for remote management and data analysis.
So they're building a whole ecosystem around their sensors.
They are. And importantly, they're also continuing to develop their next generation custom silicon chips, which could be a real game changer for their cost structure and overall competitiveness.
Yeah, that's going to be key in the long run. Now, we also saw some mention of their commitment to ESG. How does that factor into their overall profile?
ESG, so environmental, social, and governance factors, are increasingly important for both companies and investors.
Yeah, it's not just about profits anymore.
Exactly. And Ouster has a stated mission to contribute to a safer and more sustainable future. They've got a formal sustainability program, an ESG advisory committee, and policies that focus on things like ethical governance, human rights, fair labor practices, environmental protection, transparent operations, and community engagement.
So they're taking it seriously.
It seems so, and that can be attractive to investors who are looking for companies that align with their values.
Right, it's not just a box-checking exercise.
Definitely not. It's about walking the walk.
Now, what about global compliance and regulatory matters? Do they have any particular focus in that area?
They do. They're committed to ethical governance and compliance with all applicable laws and regulations in the markets where they operate. And importantly, their products are NDAA compliant and Buy American certified.
So that opens up opportunities for them to work with the government.
Exactly, especially in areas like defense and infrastructure.
And we also saw that they have a pretty substantial patent portfolio.
They do. As of late 2022, they had 173 granted patents and over 500 pending applications.
So they're actively protecting their intellectual property.
Absolutely. In a field like LiDAR, which is so technologically driven, patents are crucial. It gives them a competitive edge and potentially even creates opportunities for future licensing revenue.
Yeah, those patents are like gold in this industry. One last technical aspect I wanted to touch on is the field of view of their sensors. I remember seeing some mention of wide field of view options. Why is that important?
Offering sensors with a wide field of view, like their OSS series, which has a 90-degree vertical field of view, it's really important for certain applications.
Okay, like what?
Well, think about robotics and industrial automation.
Hmm.
In those settings, robots need to have a really good understanding of their surroundings, not just horizontally, but vertically, too.
Right, they need to see everything around them.
Exactly. And a wider field of view lets them do that with a single sensor, rather than needing multiple sensors to cover the same area.
So it's about efficiency and completeness of data.
Exactly. We've covered a lot of ground here, and it seems like Ouster has a lot going for it. But of course, as with any investment, it's important to consider the risks and challenges as well.
Right, we want to paint a complete picture here.
Absolutely. So, one of the biggest challenges they face is competition. The LiDAR market is very competitive with both established players and a growing number of lower cost suppliers, particularly from China.
So they're facing pressure from both ends.
Exactly. And while they're growing rapidly, they still haven't achieved sustained profitability, which is a concern for some investors.
Yeah, that's the big question mark. When will they actually be consistently profitable?
Right. And there's always the risk of market saturation, where the growth slows down as more and more competitors enter the market.
Yeah, it's a hot market now, but that might not always be the case.
Exactly. And then there are the broader macroeconomic and geopolitical factors like trade tensions and tariffs, which could impact their costs and margins.
Yeah, those are always wild cards.
They are. And then, of course, there are the operational risks, like their reliance on third-party manufacturers, inventory management, and the need to constantly innovate.
Right, they can't afford to stand still.
Absolutely. And as a relatively young company with a limited sales history, there are also risks associated with managing customer relationships and securing those long-term contracts.
So a lot of things to keep in mind.
There are. And finally, it's worth noting that there's a relatively high level of short interest in their stock, which suggests that some investors are betting against them.
So some skepticism out there.
There is, but, that's not uncommon for a company in a high-growth emerging industry like this.
Okay, so it's something to be aware of, but not necessarily a deal breaker.
Exactly.
Well, I think we've covered a lot of ground today. We've taken a deep dive into Ouster, their recent financial performance, their strategic initiatives, their competitive landscape, and some of the potential challenges they face.
Yeah, we really looked at it from all angles.
And hopefully, this has given our listeners a better understanding of Ouster and what to consider if they're thinking about investing in this company.
That's the goal. Always important to do your own research before making any investment decisions.
Absolutely. Well, that brings us to the end of our deep dive into Ouster. If you enjoyed this analysis, please subscribe to Stock Explorers for more deep dives like this one. And don't forget to like this episode and turn on notifications so you don't miss our future content.
Thanks for having me. It's been a great discussion.
Thanks for being here. And for all our listeners out there, until next time, keep exploring.